Wait. Before we start this video, I highly recommend you using headphones. Because if your wife, sister or mother hears you that you are interested in buying gold, then minimum to minimum एक कान की earrings तो देने ही पड़ेंगे. Now I know this sounds a bit stereotypical and someone might get offended, but wait, before you conclude anything, just check this. So Indian women as of 2020 hold more than 21 tons of gold, which is about 11% of world's gold. So I have told you before, watch this video at your own risk. So in this video, first we'll talk about why we should invest in gold. Second, what are sovereign gold bonds? Third, what is the differences between physical gold and sovereign gold bonds? And last but not the least, what is the right way of investing in gold? So why do we invest in gold? Take a look at this. So this is the dollar value chart of how gold has performed in the last 30 years. Now look at the points that I have highlighted. In 2000, we had the dot-com bubble burst. In 2008, we had the financial crisis. And in 2020, we had the COVID crash. Now see the returns that gold has given from these points. Now this confirms the fact that gold acts as a great hedge against inflation and when the stock market crashes. Now if you need a more quantifiable data, take a look at this data. So this is the performance comparison of Nifty 50 versus gold, and here you can see clearly that when Nifty has crashed by a big margin, gold has acted as a good hedge against it. So we now know why we need to invest in gold, right? So in the next section of the video, let's check out what sovereign gold bonds are. So sovereign gold bonds or SGBs. So bonds means securities and sovereign means that it has been issued by the RBI or the government. So by definition, sovereign gold bonds are the securities that are issued by the RBI on behalf of the government in grams of gold. Now this is just the definition of sovereign gold bonds and doesn't really describe its features, right? So don't worry, we will discuss about those in the next section of the video when we discuss the differences between physical gold and SGBs. So the first and the biggest difference between physical gold and SGBs is interest rate. So when you buy and hold physical gold, the return that you get is in the form of the appreciation of value of gold, right? But in case of SGBs, along with this capital appreciation, you also get an additional interest of 2.5% per annum on the initial investment that you made, and the interest is paid to you every 6 months. So physical gold is risky to hold as there is a chance of theft or it getting misplaced. Also, when you talk about storage of physical gold, it can be a bit of mental pain and could be a bit costly too. But SGBs come in the form of physical bond certificates and they can be stored digitally in your Demat account as well. So because of these reasons, SGBs are much easier and safer to store. When you buy physical gold, you end up paying making charges and GST. So you get less value for what you pay for. But when you buy SGBs, there are no making charges and no GST. In fact, if you buy SGBs online, you'll get an additional 50 rupees discount per gram of gold. The second part of getting what you pay for is purity. So in order to make physical gold more strong, some alloys are mixed with it. So because of it, when you try selling it, you don't get the complete value out of it. But in case of SGBs, it is only issued for 999 purity or 24 karat only. Because of this, whenever you try to sell any SGBs, you get 100% of the value of gold. So if you're ever in a need of money, you can almost immediately sell your physical gold, right? But in case of SGBs, it comes with a maturity of 8 years. And it has a lock-in period of 5 years, only after which you can sell it. So this may sound as a bit of disadvantage, but it has a hidden advantage to it that we'll discuss in the last part of the video. If you sell physical gold within 3 years of acquisition, then it would be termed as short-term capital gain. And the short-term capital gain would be levied as per your income tax slab. So if you're not falling in an income tax slab, then it's good for you. But if you do, then it could cause a bit of pain. Also, if you're holding a physical gold for more than 3 years, it would be deemed as long-term capital gain and it would be taxed at 20% with 4% cess, which effectively comes out to be 20.8%. For SGBs, the 2.5% interest rate that you get paid every 6 months is added to your income and it is taxed to you at your income tax slab. But in case of capital appreciation, if you hold SGBs till maturity, then there is no tax on the capital appreciation. So good deal, right? Now check out this data. See the graph on the left. You will see that the average return that gold has given in the last 10 years is 5.7%, which is the lowest. And the average return that it has given in the last 20 years is 12.4%, which is the highest. So you see how volatile it is. To confirm this, on the right hand side you will see that in the year 2000, gold gave a return of 0.4%. In 2011, it gave a return of 30%. Whereas in 2021, it gave a negative return of 4.4%. Now this is not it. Gold prices can stay stagnant for a really long time. So let's go back to the 30-year-old chart of gold that we have discussed previously. So here you will see that between 2012 and 2020, if you have bought gold in 2012 and sold it in 2020, then you have made almost no money and it's break even, right? So my mantra of investing in gold is to invest small chunks and hold it for a long period of time. So how to do that? So RBI opens the subscriptions for SGBs in tranches. Check out this image. These are the dates released by RBI. See that the Series 9 tranche is active till today and Series 10 will be active from 28th Feb till March 4th. So if you want me to make video on how to invest in SGBs online, then let me know in the comment section below. So that's it for the video guys. I hope you liked it. If you have any questions, let me know below. Thank you for watching. Take care. Bye.